Hey, welcome back to Mind Your Biz. My name is Seth, and you are watching our news update. We're streaming from the live from the dungeon, from the pit. That's right, Mind Your Biz Studios. Mrs. Mind Your Biz is not with me this morning. She's getting ready for a family outing, spring break in the Mind Your Biz residence, and we've got some very fun activities. We might take some B-roll. We might publish some of that later on, but I don't know. We might not. Here's the thing. We're not vloggers. We don't vlog. We're not family vloggers, certainly. We don't vlog about our life. We don't show off too often our family. And if we do, we try to redact most of that. So I'm very careful. I'm very cautious about our family's anonymity and privacy. Our kids, we want them to have a normal life. So we don't show them off too much. Without further ado, let's jump into the Fear and Greed Index. Current score of 62. It's kind of flatlining, right? We're in that same region of greed, and some are saying we might go back to extreme greed, meaning that we might see an increase in the Bitcoin price. We might see a commensurate increase in people's greed towards the Bitcoin price. We're back up towards that. We hit the $28,000 level of Bitcoin. I shouldn't say we're back up to it. I'm using the free version of tradingview.com to just quickly look at some of the charts here. I don't do anything fancy. I don't offer technical analysis, but we do look at the charts on a regular basis so that we don't miss out on what Bitcoin has recently done. And if you're new to the channel, hit that thumbs up. Stay subscribed. Turn on notifications, all notifications, right? So you have to click the little bell icon and make sure that it says all. But do all the things, right? Click all the buttons. Your clicks count, but here at Mind Your Biz, they might even count for a little bit more because we are a little channel that could. Jumping back into that chart, though, we've got this trend line that we've kind of held true to, but Bitcoin is really operating in this sideways channel. It really is moving sideways right now, has been for the last week and a half, 2 weeks. And yeah, we had this other pattern that broke to the downside. And I feel just fine about leaving this right here, because if the bulls are correct, we need to continue to move up. And I think that we're going to move up at that kind of more conservative pattern, not some, massive parabolic shift to the upside that shows a printing of $1 million Bitcoin right in the next couple of weeks, right, a couple of months. I think that that's absolute insanity to believe that we're going to see that number of Bitcoin anytime soon. And yeah, I think that cooler heads will prevail, and I think that Bitcoin will kind of print a more reasonable price. I'm going to quickly double check my live stream to make sure that we're actually getting this to where it is supposed to go. My apologies. A little bit of technical difficulty this morning. See that number? All right, looks like we actually are broadcasting correctly, and just double check to make sure that we are actually public. It looks like we are. Can never be sure, can never be too safe, but and we did have an issue with setting up the stream today that did not go public initially. So anyway, thank you for your patience. Thank you for your support. Thank you for being here. Definitely, you're the reason that I make this media. It's very, very helpful to have you here. So I'm not just, streaming to an empty room. But that Bitcoin price up and to the right, generally speaking, sort of sawtooth pattern up, and it has been kind of seeking new support levels higher and higher. I'm not going to pretend to have some kind of fib levels set up that will give us some kind of truth as to where Bitcoin is headed. I only like to look at where Bitcoin has gone and, have some basic idea of where it's gone recently and kind of set my chopsticks around that. Let's jump into crypto bubbles as well. Take a look at the broader markets. Right now, we've got Kaspa, the biggest loser in the last 24 hours. It has been sort of pulling back from its, I think, 1 week high, right? So 1 week or 1 month high, it had a tremendous amount of growth over the last month and has retraced significantly since then. So yeah, is it a huge shock? Are people expecting for Kaspa to melt faces? Well, yeah, some people are. There's a lot of exuberance around Kaspa. I think largely because of the proof of work mining. There's a lot of miners that are excited about Kaspa, and I can't say I blame them. There isn't that much that's extremely profitable to mine right now. Kaspa has helped pump some people's bags, but I would be really cautious about making price predictions of it going to a specific amount in a specific amount of time. It's just a dangerous game. It's a very, very dangerous game to try to make those kinds of predictions on these assets. They're all speculative. Any number of these assets can discover a vulnerability, and especially when you're not actually a blockchain, you're a more loosely you're more like this one. I guess it's a DAG. They've got a special kind of DAG is what Caspa does. It's not, strictly speaking, just a blockchain. So there are other vulnerabilities that can creep in, and the immutability can be at question. The permissionlessness, just because a blockchain or a crypto project is permissionless doesn't always mean that it is as censorship resistant as others. So, I need to do more homework on Caspa to be sure that I understand all those fundamentals to bring them back to you. But I like using the simple heuristic, right? The simple heuristic of, if the audience is going there, if there's a huge stampede of people going over there and showing interest, I need to be cautious. I don't like following the crowd. And that's kind of what gave me an indication that Polygon was going to likely win in the scaling wars of all the competing layer ones against Ethereum, even though it's not technically a layer 2, right? A lot of people viewed it as a layer 2 sidechain instead. But sometimes, people do the work for you by just being irrationally exuberant and trying to pump their own bags, losing objectivity, and pretty much just creating a bright neon sign for the rest of us, like, don't go there, because they're a little bit too excited. They're pushing a narrative a little bit too hard. So shout out to Nerd Girl for keeping that skepticism and doing a really good job of fighting tribalism. All right, jump into the news. Today we got Tether no longer submitting attestations. What are attestations? Well, it's just regular reports of what their holdings are. But Tether was doing that for a time, and they were using a firm out of Italy that was creating those attestations for them. And why? Well, they were doing that because of the most highly regulated area where they operate. That is in New York, right? So the Attorney General of New York required that Tether would give them attestations, but apparently they are no longer legally required. They don't have to legally submit attestations of their reserves. And so they don't have to do that quarterly. They don't have to do it monthly, annually, semi-annually. There is no more requirement at all for Tether to do this in the state of New York. And I'm a little bit surprised that this is not bigger news, but Circle was doing that, talking about their institutional paper or their commercial paper. And, I think it's funny that iProtos is going out of their way to create this, or Protos going out of their way to make this like FUD piece on Tether, but nobody is asking the same tough questions of Circle, and nobody is digging any deeper with Circle. So transparency page detailing how many Tethers have been minted. They're saying they can't suggest that it can't be relied upon 100%. Yeah, you're probably right. But the commercial paper, concerns about commercial paper in Tether's holdings have been kind of a big pain point for people who use Tether for a while. And yeah, they say the attestations, in their opinion piece here, ultimately likely did little for law enforcement, who have probably acquired much more interesting data and customer information from taking over Signature Bank. Very fast times right now, right? All kinds of things happening. And I think they're right. There's more real information about market manipulation, about whales, about all kinds of nasty crap that's going on in the crypto industry by looking into these banks. So there. Are we going to miss? Yeah, Tether's attestations? Probably not. But I don't have direct exposure to Tether. I try not to hold it too much. I also try not to hold USDC, right? Circle dollars. So I'm a little bit worried about the dollar in general, as I'm sure you are. Let me know when you're in the chat what your thoughts are on the stablecoin situation. It's a very tricky topic right now. But Doge, not tricky. It's just popular, right? Backed by popular demand. Apparently, Domino's Pizza started to talk about Dogecoin. Now, I don't know. This doesn't actually come from directly from their media. But apparently, Domino's had a Dogecoin tweet. Dogeminos, right? See that? Domino's UK. There you go. Dogeminos. And apparently, yes, Doge, the new profile pic here. Oh, my gosh. That is hilarious. And so Burger King did a similar thing. It just makes sense. If you're a social media manager and you have, this is low-hanging fruit, right, to pick on Doge and get some clout, right? Get some clout from riding on Doge's coattails or riding on Doge's tails. I don't know. But the point is that this is another brand that's doing it. So, yeah, yeah. There's no reason not to. Doge is going to respond, so like, why wouldn't you? Yankee says, "I love gold." Hey, I appreciate that sentiment. I needed to make the announcement the other day. I have been publicly named as the Director of Technology over at the Emerging Assets Group, and one of our first projects is Block 47. So I'm right there with you. I think that durable assets make a lot of sense. They're not the only thing that makes sense, of course, but they do make a lot of sense. And I don't understand why some crypto people and Bitcoiners are so anti-gold or anti-precious metals. You can own both, right? It is possible. We have the technology for you to own both. We even have the technology for you to tokenize your gold. What? Tokenizing your gold? What would happen, right? Dogs and cats living together. It would absolute mayhem. But Dubai, a regulator from Dubai, has demanded that Binance provide their information on ownership and governance. This is a little bit new. I think most people view Dubai as some kind of a crypto haven where you can conduct your business without any concern about too much regulatory oversight or having it be onerous regulatory oversight. So, and I heard somebody recently tell me that that the regulatory environment in Dubai is very favorable towards Binance, and that they've been rejecting American input as to regulatory inquiry, right? Like basically saying, hey, U.S. regulators, you stay in your own lane. We will deal with people and companies that operate out of Dubai or out of the UAE, right? The United Arab Emirates. So in case you're not familiar with the geography, the situation there, Dubai and Abu Dhabi, right? These huge cities, they're just that. They're territories and cities within the United Arab Emirates. And so it's apparently a lot more common for these regulatory bodies within the United Arab Emirates to handle all of their own business and to deny requests from outside governments to try to peer into these businesses and the way they operate. So I was a little bit surprised to see that this is finally happening. They've been telling U.S. regulators, like, hey, Binance operates here in Dubai and we'll handle that. But now they're finally getting around to it. It's very public that they're looking into it. So apparently it's the Virtual Asset Regulatory Authority, or VARA. They oversee crypto activities in Dubai. They've asked Binance to provide more information about its business requirements in its efforts to tighten regulatory guardrails in the emirate. So, yeah, the regulator had asked Binance to submit more information about the exchange ownership structure, governance, and auditing processes. People close to the matter said VARA has requested the same details from global crypto players looking to be licensed in Dubai. But again, I'm just surprised that, okay, Binance has been operating out of Dubai for some time. This is the first time they've asked about this. They didn't ask about this when they were first forming their corporation in Dubai. What happened? Why wasn't that done earlier? But this is hot on the heels of the CFTC filing a lawsuit against CZ, right? Changpeng Zhao, the CEO of Binance. And he's rejected the claims, calling them an incomplete recitation of facts. And he says that Binance does not trade for profit or manipulate the market. I think all of us realize that every centralized exchange, that they have to be manipulating the market. They offer access to market makers. Bare minimum, users of the platforms are empowered to manipulate the market because there has been such a lack of regulatory oversight for so long. There's still no law against wash trading as a third party using these platforms. Now, I mean, that may be changing as of the time of this recording, but yeah, there's all kinds of manipulation that can take place by using these centralized exchanges. I mean, he as the CEO needs to deny those allegations, but we all kind of realize that it's a thing that happens because of centralized exchanges. The moment you put crypto onto order books, it is a black box of financial activity. So you don't have to keep yourself accountable to the blockchain ledger, right? Every trade is not transparent, and not even every full coin supply is transparent, right? This makes intuitive sense to most people, right? If you give me $100 of yours and I say that I've got $100 of his and hers and hers and his, then you kind of take it on faith that I have all that money, right? That I have $500 or $1,000, whatever it is, using that example. When I take your $100 and then run, right, a game of craps or poker or something, I just issue you chips And you just take for granted that I have all the money to back all those chips. Centralized exchanges are a lot like that. They are a lot like a casino. They are a lot like an informal poker game, right? You're trusting whoever runs the treasury to just be honest. And yeah, there's all kinds of manipulation. Anyway, I'm not going to wax too poetic here or drone on, but I'm surprised that it took so long for Binance to be we'll just say investigated by Dubai, right? Or more thoroughly vetted by Dubai. We've got an article coming out of the Daily Hodl with $160 million of real estate and assets seized from Terraform Labs. Not Terraform Labs, but Terraform Labs employees. This is a big deal. So straw transfers or straw purchases made on behalf of these employees that was really meant to hide the holdings of Terraform Labs. But let's see. We're just going to keep on seeing more and more fallout. That's the bottom line. We're going to see more and more fallout as there's more investigation into Terraform Labs, and it's so obvious that they were using their employment structure and so many unqualified expenses to hide the theft that they made from customers. It's unfortunate, but not your keys, not your coins. We've talked about that. This is a sovereign channel. We talk about not using centralized yield and centralized platforms other than maybe to make spot trades, or if you need to use a fiat off-ramp or on-ramp. Centralized exchanges are fine for that, but you want to turn it into the native asset as soon as possible. If you don't, manipulation like this is typically what we expect after the fact. So there it is. There it is. Yeah. All right. Moving on with the news that we have for today. Coming out of the block. Ethereum projects are coming together on an MEV blocking RPC to share profits with users. Now, what is an RPC? It's the node that helps to relay what information is coming out of a given blockchain or network. On Ethereum, most RPCs, they do participate in maximum extractable value. And hey, when Ethereum was proof of work, the narrative was that MEV stood for miner extractable value, that somehow proof of work miners were the only beneficiaries of this loophole in the way that blocks, the block rewards, block subsidies are designated on the Ethereum network, meaning that every single block there was basically, we'll just call it manipulation, right? Gas fee market manipulation in order to extract more value. Kind of straightforward, but the narrative before was that the M stood for miners and that proof of work miners were the problem. Well, we've been off of proof of work for months now in Ethereum, but MEV still exists. What gives? Clearly, it was never about the mining. Clearly, and that was something that that the miner roundtable that took place at that time, with so many crypto YouTube channels coming together to talk about it. That it was pointed out very early on that miner extractable value was really just a loophole in terms of the gas fee marketplace, and that it had nothing to do with miners. Flash bots and other MEV injection created that value from nothing, and it still exists. And so now, finally, there's a huge effort underway to try to block that abuse of the Ethereum network. Now, people who've been able to successfully walk away with these profits, inject the MEV, or rather extract the value from each block being mined or minted on the Ethereum network, I'm not even mad at them. You do you. If you can get away with that, great. These are open systems, permissionless. They're supposed to be permissionless. And when they're open and permissionless, that means that competition will be extremely fierce. Right? These are adversarial environments where other people want to get the block subsidy. That's the whole point of mining, is that it's a race against somebody else to earn the rewards for that block. Period. I mean, in simplest terms, it's a race against other people to add enough value to be the first to get that block reward. And if you're solo mining, then and you stand a real shot at earning that block reward, then great. You're the one that gets it. But miner extractable value is something else. Right? It's also adversarial, also open and permissionless, but also just not very transparent. Most people, unless you know where to look, you know how to order the transactions and order the gas fee marketplace in such a way that you can make yourself first and inject those flash loans and flash bots, etc. There is there's just a bunch of room for for others to come in and just wreck these networks. So there's just not a lot. There's not a lot of transparency about how MEV really works. Not a lot of transparency about how flash bots are really getting in the way. People know they work, but it's kind of like black magic, right? It's kind of like voodoo. And this RPC, we'll see if it actually gains enough adoption. It would need to be something that Infura supports as well. It would need to be something that becomes a default in certain becomes a default in certain wallets. Specifically, it has to be the wallet default client, or it's going to be an issue moving forward forever. It's going to continue to be this thing that just happens on Ethereum that people can't get past. All right. Hey, I see Latrell in the chat saying hello all. Thank you for saying hello, Latrell. Thank you for your support. Let's see. Paul D says, I'm surprised ETH is still a front-run mess now that it's not mined. Yeah, appreciate you, man. Yankee dropping some very personal information about how he loves to flash. And Paul D is asking about a Sumo Coin future. Wait, Sumo Coin isn't entirely dead? Carbovanets? All these completely anonymous forks of Turtle Coin and Bytecoin, they're not all entirely dead? Let's take a look at that in the portfolio in a minute. I'd be shocked if they're still going, though. I think there's been way too much manipulation there as well. But tell me what you think. Would you run a custom RPC that gets rid of maximum extractable value, the front running of Ethereum? If you thought it really worked, would you use it? Would you go out of your way to actually add that to your wallet? I mean, I might, maybe. I'm more interested in private RPCs that help make my transactions less, more anonymous, I guess, but less likely to be scraped by the consensus group, right, that runs Infura and MetaMask. So, yeah, I don't know. I don't know if I would do it. Being Crypto talks about how Australia is moving to crush crypto. Apparently, they say there's a need for regulation in crypto across the globe, but Andrew Bragg submitted a private senator's bill titled the Digital Assets Market Regulation Bill 2023 to protect consumers and promote investors. It includes regulatory recommendations, not requirements, just recommendations for stablecoins, licensing of exchanges, and custody requirements. They say that it aims to provide a regulatory framework for crypto exchanges, custody services, stablecoin issuers, with which they think will protect consumers and promote investment. I disagree. I think that the more we regulate all of these different sides of the crypto ecosystem, the more we're going to see that there's just industrial espionage or sabotage committed by one professional group to another. The same way that we saw Terra Labs and Alameda Group basically in a secret battle, right, behind the scenes. They were in a secret battle. Now Internet Computer Protocol, all of these sort of like VC chains that have all been battling each other behind the scenes, they're going to continue to do battle. And the more of a regulatory framework there is here, the more likely it is that they're going to use that regulatory framework to create an inhospitable, anti-competitive environment for their market competitors. See, they're going to try to make advantages for themselves and get rid of any advantage that competitors have. This is as old as big business in first world countries, right? In emerging, the emerging markets within established countries happened in Great Britain hundreds of years ago. Happened here in this country over 100 years ago. The robber barons completely took over industry in this country because of shifting regulatory requirements. Either no regulation, they saw a power vacuum, an opportunity to take it up. And then when regulation did happen, they went and bought and paid for their favorite regulators to improve the conditions for their company and their interests and make it anti-competitive for anybody else to join, right? So the little guy or the middle guy gets totally cut out of competing at all. The big guys just win more market share, and they try to find some side of the industry, some sector within the industry that they can dominate, they can sew up and edge everybody else out. So you want to be a stablecoin guy, the stablecoin producer? well, you're going to become the best stablecoin producer. Everybody else is screwed. Well, you want to do centralized exchanges? You're going to become the biggest and most dominant. Everybody else is screwed. So regulation doesn't tend to have the effect that a lot of these regulators think it does. There are always unintended consequences, knock-on effects, right? Ripple effects. And I think we're going to see very, very soon that, countries like Australia, all they're really doing, is crushing crypto. Doesn't matter that they're talking about regulation somehow helping consumers. That's always how they get it passed. But what it winds up actually doing is crushing competition. So what do crypto companies do? They just freaking leave. They don't stick around. And Australia, with its very anti-privacy stance, that it's been growing into more and more of a surveillance state, very not consumer and retail friendly. Who would blame anyone who has a business in Australia, a crypto business especially, if they just up and left? I wouldn't. News like that to me is very bearish. Let's talk about our portfolios. I'm going to jump into CoinGecko. Been a little while since we've looked at the portfolios here. This is the all portfolio there. Lots of old stuff that's inactive. I don't even know how it went into that side of the, it's funny. Dubai coin. Y'all remember when Dubai coin completely went off the rails? It was huge. Dubai coin, if I recall correctly, it was proof of work mineable, and it was top of the list for profitability for a day or two. And on the stream, we talked about it, and it is an issue. So let's see. I don't know what's going on with our comments. I don't know what's going on with our views. I really don't know. But thank you for being here. Thank you for being supportive. Absolutely appreciate you offering your support and sharing while we are live. If you share, that does help. If you comment, that does help. Thank you. But if you're here and lurking, please do submit a comment, chat with us. All right, Caspa is at the top of the stack. We have an unrealistic amount right here. Let's take a look at recent price action for Caspa. 14% down over the last 24 hours. So it is bouncing downward over the last 24 hours, not finding the support that everybody, I guess, who's a bag holder hopes that it will have. 7-day, it did have a little run up, and it's now basically finding support again about where it was before it ran up. Had a spike just before that. 14-day, overall up. Last half a month has been very exciting for anybody holding Caspa. It's about double your money over the last 14 days. Now, far be it from me to tell you what to do with your gains. If you have a bag of Caspa, do what you want with it. But, I'm a huge fan of taking profits where profit taking is profitable. Did I say the word profit enough? Maybe you should consider taking profits. Is that advice? No, it isn't. It used to just sound like common sense. But if you hold the bag until it's no longer valuable, then that's on you. That's not on the market. That's not on your favorite influencer to go and pump it or dump it. Just be very, very mindful of your own, your own bags. Don't make it your favorite influencer's job to pump your bags. That would be very dangerous indeed. Certainly with coins like Ravencoin and Flux, it can flip before you know it. It can flip very, very quickly. It's kind of funny. MEXC Global, Gate.io, DigiFinX. I don't trust these very much. I do trust TradeOgre to have the correct amount for actual the ability to actually take profits out of a given coin supply. I feel like TradeOgre normally shows that things, the absolute state of things. 24-hour volume on TradeOgre is relatively low compared to everything else. MEXC Global, it looks artificially high, right? 80% of the volume there. So if somebody is pumping and dumping, they're doing it through MEXC Global. Just straight up. APIs are there to automate that. So totally a possibility there. Be careful. I'm just telling you, be careful. And if it's coordinated, be careful. There's always going to be somebody that will front run you. If you think you're part of a pump and dump, be careful. I really can't stress that enough. Don't believe the hype on any coin. Don't believe the hype, including Bitcoin, right? We're not going to see $1 million Bitcoin yet. So careful. Flux is there in the leader, the leader board. Cortex and Conflux are also above their baseline from the entries that we put into our paper trade portfolio. So they're up, but not by much. Everything else is down based on what we put in from the last bear market or moving into the bear market. And you got a lot that are clearly on life support. Etho protocol is one of those that is that's clearly very manipulated, but not dead yet. There's somebody with an interest in pumping this coin or holding its support, propping it up. So there's a bit of an issue there. But yeah, Etho protocol clearly see clear signs of manipulation in the chart. I can't say that it's definitely manipulated, but clear signs of it in the chart. Just is what it is. I mean, you tell me if you can honestly tell me that it's not being manipulated after looking at volume like that, volume and activity like that. We'll open it up just so we can see it very clearly. Let's see. Yeah, the volume also has spikes that correlate to the price, so something's really not right. Automatic Beats is in the chat, says, good morning, miners. Thank you so much for being here and being supportive. Let's see, what else? Yeah, Stex and Mercatox, Probit as well. None of these, they don't even have a trust score listed anymore. And it's all, oh my gosh, it's basically two pairs, Ethereum and Bitcoin. Not even showing us what the 2% depth is, just showing us that over the last 24 hours, each one of them is about 25K. So there's got almost 50,000. That is, that's basically the full amount. Well, what I think I'm seeing here is you can take $50,000 worth of Bitcoin and Ethereum, and you can prop up a coin that has about a $500,000 market cap and make it seem like it's not dead yet. That's what I think I'm seeing. So, wow. The lessons that we learned here inadvertently from just checking that out. Let me go ahead and pull up, while we're going a little bit longer on today's stream, pull up a tool that we've been looking at recently, hashrate.no. A quick look at the portfolios as well, but hashrate.no, this gives us a little bit of market intelligence as to what is doing well right now, price gainers of mineable coins, and the earning gainers of daily mineable coins. I really like the way they have this laid out. I haven't gone into a deep dive with this just yet, but as you see, it's pretty straightforward, right? That it lets you know a few different leaderboards, but apparently Radiant and Ravencoin and Neoxa are up. Neoxa is that mid cap, right? Or the nano cap that I just can't bring myself to believe in. I think it's a huge mistake to still be interested in Neoxa. Same with coins like Callisto Network. You do have Firo that is showing greater gains for the hash rate versus some of its competitors. And I've got that interview with Ruben Yap coming out very, very soon. Let's see. And then price gainers, Zano also did an interview with another side of their development team recently. As you know, over the last 5 years, first to interview some of the privacy coin developers in the proof of work space. And I won't be the last, but I was the first. And in some cases, the first to interview their entire team. Had privacy developers docs for my channel, so we're gonna continue with that. Got about still about 7 or 8 interviews that are just in the can, waiting to be released. So those are coming out this week while we are on the kids are on spring break, and then while I am in New York for NFT NYC. So if you are in New York for NFT NYC, then by all means reach out. Maybe we will meet up. Maybe I'll see you at the trade show. Maybe I'll see you at one of the after parties, but I will be there. So yeah, there you have it. Hashrate.no, great tool for you. That's why I've been just kind of calling it out. Paul D says the Zano interview is good if you haven't seen it. Well, I appreciate that endorsement. Thank you so much. I'm biased, but I think all the interviews that I do with developers who've never been interviewed before in the space, even though they've been working quietly behind the scenes on privacy coins for the last 10 years, I think they're pretty good just by their fundamental nature. I think it's good content. That's why I'm interested in doing those interviews, and that's why I don't charge those projects for those interviews. As far as there being any kind of paid time, right? Sponsored content to do overviews of different projects, generally speaking, I just don't even accept any kind of a bounty from privacy coins because I think it's that important to bring to you. And I try not to pump my own bags. The Zano interview, I don't have any kind of a significant Zano bag. I did a week 1 mine of Zano. Don't even hold those coins from when I first mined it. So anyway, it's just privacy is that important. But back to the portfolio. Got a lot of coins that are just like they're just hemorrhaging, just absolutely suffering. So Haven still below that 50-cent mark, and then Proof of Memes just continuing to struggle to get any kind of adoption. What's funny is that Meme NFT, the platform that it was designed to help support, is a great project. And the leadership team is pretty strong. I've met them at a couple of events, and they've definitely impressed upon me that they have what it takes to understand the NFT ecosystem and create a marketplace that has really good cross-chain support. So anyway, hard drive mineable coins, is it finally Chia's day? It looks like it's not quite Chia's day just yet, but we also haven't gotten close to that $15 mark. So I mean, I'm not under any obligation to pick up any more, but we're below $40. Interesting there. The only coins that are close to not being completely upside down since we made our paper trade in the portfolio is MadeSafe coin and Storage. Sia coin is also up a little bit, but everything is pretty much decimated from when we first put that into our portfolios. CPU mineable coins, Epic Cash, and Raptorium are up. Everything else is way down. Raptorium, if you didn't see my additional interview with Big Piggy or David Owen Morris from the Raptorium project, you should look that one up as well. We talked about weeks before anybody from the Bitcoin community or the Ordinals community were talking about it. We talked about the possibility of doing DeFi on UTXO-based chains. What can I say? I'm trying to throw value at the crypto ecosystem as best I can in the ways that I understand. That's one of those ways. Exclusive interviews with people who were around 10 years ago working on the code, and who are working on it again. So check out that interview as well. That's our CPU mineable coins. ASIC mineable coins, everything is in the crapper. Bitcoin, even at $28,000, you'd still be down 28% from when we put that into our portfolio. If you were buying as Bitcoin was retracing from its previous all-time high, somewhere between the $40,000 to $20,000 range, you'd be struggling to make gains right now. So yeah, everything else pretty much upside down. Nothing doing particularly well or great. Cadena is okay. It's doing all right. TBTC spoke briefly with the leadership of this project, and it is interesting to me. I got to call this out. TBTC, like what actually is it? It is the Threshold Network's wrapped Bitcoin. So think of it as like the WBTC ticker symbol, but with a much more decentralized wrapping protocol that prevents abuse, because there isn't a third party. There isn't a counterparty that can turn off your tokens, if that makes sense. With WBTC, a lot like USDC or Tether, your wallet token balance can be shut off by the smart contract private key holder, the admins of the smart contract. With TBTC, I understand it's a little bit more decentralized. To what extent it's decentralized and permissionless, I don't know. But it's supposed to be a better option than WBTC. That said, Synthetics BTC is supposed to be another great option, and that's why it's here as well. TBTC, SBTC, they're not as commonly supported as WBTC in most LPs or smart contracts. But you can LP these two tokens so you can get yield from your Bitcoin, your wrapped Bitcoin, on Ethereum or on any of the other networks that they support if they've been bridged over to Polygon or Binance Smart Chain or whatever else. So it makes it interesting. It keeps Bitcoin that much more interesting to have it tokenized, wrapped, and then to be able to use it in providing liquidity for these DEXs. So fun stuff there. FPGAs. Now, if that didn't make sense to you, I apologize. DeFi takes a little bit of time to get used to. It takes a little bit of time to start to understand. The first DeFi summer, I lost a lot of money trying to figure it out. And I didn't publish those losses. I didn't publish those L's because I still didn't feel like I understood. So I apologize if I present that in a way that sounds cavalier or like, it's easy. It's not easy. Figuring it out at first is like, okay, well, it can be explained simply, but you got to put in the homework to understand that vocab. FPGA's got Cadena that is still profitable, though strictly speaking, it is more of an ASIC coin than it is just an FPGA coin, right? So bit of an issue there. Proof of stake smart contracts. Phantom is the only one where we actually created a portfolio entry that it's still in the green, which is hilarious because both Phantom and Avalanche, these top two entries, are centralized AF. I don't think anybody trusts that they're fully decentralized or that they're permissionless or that they're censorship resistant. I think most people who value censorship resistance and decentralization are not building on these chains. But there you have it. They've performed relatively well. And then Binance Smart Chain and Tron. I mean, it's crazy. It's like a who's who of centralization. Cosmos Hub, probably a little less centralized, probably a little bit more permissionless, but even still, you have a degree of centralization in terms of the validator network, the validator infrastructure. You've got a lot of the validators that run within the Cosmos ecosystem, where you have these larger corporate interests that run all the validator infrastructure. So take caution there as well. The junk drawer, Saitama Inu is still the biggest winner. Luffy and Everrise also big winners in that portfolio. It's kind of funny because it's, these are not realistic holdings right here, but it's funny that they have these massive gains. There's a lot that's in the green though, including the hex bag that we put into here. Anything that's above this price is still in the money. So it ran up to well past 12 or 40 cents, then retraced. Pulse Chain launched its V3 testnet, and they rebased to actual Ethereum source code. So it's going to be interesting to see what happens with Pulse Chain when it goes live. But I'm not holding my breath for anything there. IBC gang, Cadena is the only winner. Everything else is pretty much down way bad. 10 set gems also. You got a lot that's just struggling to maintain its support at pricing that we expect. Conga Exchange is still at that 250 range for the token itself. Stables, we're not going to go over in depth. GPU ETH replacements, not going to go over in depth. The RH ecosystem, not going to dwell on too long, but it is important to realize that Pulse ApeCoin, Pulse Floki, and Pulse Moon, these three meme coins that were designed to launch on the Pulse Chain network, are already inactive. They're already gone. The mainnet hasn't launched, and these coins, these projects have already given up. Figure that out. Doge Chain ecosystem, another ecosystem that's kind of young and fledgling. Right? You have the main asset itself, Doge Chain. Its market cap has gone up recently. Big news coming out of Doge, right? It's all the hype coming out of Doge, and it's moving all the way up. The synthetic and wrapped assets. This is a category that I think is going to be important into the future. But again, disclosure, right? I am a director level and co-founder level participant of the emerging assets group. So I need to just disclose. I have an interest in tokenizing assets. None of these are assets that we represent, but I find it very interesting. And we do see uptrend on Pax Gold and Tether Gold, and then staked Ether and TBTC kind of riding sideways. Privacy coins as well. This is going to become important as we move into the future. So we'll look into that more in depth down the line. That concludes today's episodes. Thank you so much. Today's news and everything else we're going to cover. Shit, I'm actually, guys, I'm way tired. I'm exhausted from spring break. Kids are home. I'm like hardly sleeping, eating like crap, right? Party time. It's all like chips and ice cream and junk food. I'm really, really tired. So forgive me for being a little bit off, slurring, etc. But you're the reason to make this media. Thank you for being supportive, really. Thank you for being here today with me. If you weren't here, I would just stop freaking doing this. Because who in their right mind would do this, right? All of this stuff, all this crazy crypto stuff, talking about privacy, having that level of exposure and risk, talking about this speculative asset class. It would be crazy, wouldn't it? It'd be the craziest choice ever. It would have to be a labor of love. So you're the reason. Love your face. Remember to stay private. Mind your biz.